Welcome to Lesson 7. Today we cover the most practical tools for beginners, ETFs, and diversification. The chart on your screen is SPY, an ETF that tracks the S&P 500 of America's largest companies in a single product. By the end of this lesson, you'll know how to invest in a market as a whole, even if you're not great at picking individual stocks. Think of an ETF like a pizza. You may not love every topping, but the whole pie still works. Many ingredients blended into one order. ETF stands for Exchange Traded Fund, a fund you buy and sell on the exchange in real time, just like stock. Buy one share of SPY on this chart, and you're automatically spread across 500 companies: Apple, Microsoft, Nvidia, and the rest of the S&P 500. The fees are tiny. Many crude index ETFs charge about 0.03% to 0.5% AE이요. I traditional mutual funds often run 1% to 2% or more. Prices move throughout the day, and you can trade freely during market hours, just like trading a stock. Most U.S. brokers let you buy ETFs with barla zero commissions, and the same idea applies if you trade through your broker abroad. An ETF that simply follows a market index is called an index ETF, and SPY on your screen is the classic example. SPY tracks the S&P 500, QQQ tracks the ASAC 100, and VTI tracks the entire U.S. stock market. Historically, most actively managed funds fail to beat their index over periods of 20 years or longer. That's why Warren Buffett has long advised that if you don't know how to pick individual stocks, buying the market itself is the smarter path. Index ETFs aren't flashy, but for long-term investors, they're among the most reliable choices you can make. Diversification means mixing assets that don't move together, like putting eggs in more than one basket. Stocks like SPY on this chart and bonds are a classic pair. During the 2008 financial crisis, stocks plunged while bonds often delivered gains. We call that a low or negative correlation. Stock-bond correlation is often run around -0.2 to -0.3. Blend low correlation assets, and a big drop in one piece hurts the whole portfolio less. The mix cushions the risk. Crypto, assets like Bitcoin, tends to move more in sync with stocks. When equities sell off, crypto often falls with them. A well-known mix many investors use is the 60-40 portfolio. About 60% in a stock like SPY on your screen, and 40% in bonds. A more aggressive mix might be 80% stocks, 20% bonds. A more conservative one 40% stocks, 60% bonds. In your 30s, 80-20 is common. In your 60s, 40-60 is typical. You can also split by region: U.S., developed international, and emerging markets. So a crisis in one country doesn't shake the whole portfolio. Over time, weights drift. Once every year or two, rebalance back to your targets. For example, if stocks climb to 70, buy bonds until you're back at 60/40ths. There's no single right answer. Match the mix to your age, time horizon, and how much you can afford to lose. So when do you choose an ETF versus an individual stock? Products like SPY on your screen and single-name shares behave differently. If you don't want to study companies one by one and you plan to invest for a long time, this win. One trade spreads you across hundreds of firms with almost no upkeep. If you deeply understand a specific company, say Tesla or Nvidia, and you want to bet on that one business growth, an individual stock fits better. Mixing both is a realistic strategy. Build a stable base with this, then use a smaller sleeve of individual stocks for upside. If you're just starting, begin with an index like SPY on this chart. Learn how markets move and only later add individual stocks. Lesson 7 Wrap-up. On ETF bundles many stocks into one product. It trades like a stock and the fees are usually very low. On index ETF simply follows the market. Over long horizons, that approach has beaten most professional fund managers. Diversification means mixing assets with low correlation. Stocks plus bonds is the classic starting combo. A natural path. Build your foundation with ETFs first, then expand into individual stocks as you learn. In Lesson 8, we'll cover something as important as what you earn, opening a brokerage account, and how U.S. investment taxes work. This lesson is for education only and is not a recommendation to buy or sell any security.